Welcome to Top Bracket Podcast, where top performers share the strategies behind real success.
Welcome back to the Top Bracket Podcast, where we host conversations with high performers who refuse to stay average. I'm your host, mr.FourAM, and on this show, we go beyond titles and polished bios to uncover the real thinking, experiences, and decisions that shape exceptional careers. Today's guest is Caleb Basile, a certified public accountant who specializes in quality of earnings analysis. Caleb has worked on more than 300 deals and built a reputation for helping buyers and sellers make smarter M&A decisions, bringing speed, clarity, and confidence to the financial side of a transaction. If you've ever wondered what separates a clean-looking business from a truly acquisition-worthy one, this is that conversation. Caleb lives at the intersection of accounting, deal-making, and risks, helping people make sure the numbers actually tell the truth. Caleb, welcome to the show.
Thank you, Lohan. Appreciate it.
Now, Caleb, I always like to start at the beginning because people who become highly trusted in a technical field usually didn't just learn a skill, they developed a lens. When you look back at your path into accounting and M&A, what experience most shaped the way you think about the financial truth, the business quality, and risk today?
You know, my background started with in a small CPA firm doing a little bit of everything. Taxes, audits, reviews, a little bit of CFO work and bookkeeping. So I really had a good understanding of small businesses and mid-sized businesses.
Yeah.
So I was able to look at deals in such a way that most M&A professionals aren't able to because I've done all the work inside the small businesses as an accountant, and I've also audited financial statements. I'm in a unique position to show what I truly believe are the true earnings of the business.
Wow. Okay. So was there a specific season or client situation or early lesson that made you realize the numbers on paper and the numbers in reality of a business are not always the same?
Yeah. When I was in my first internship, someone pulled me aside and said, Caleb, there are 3 types of financial statements that every business has. And I'm like, what are you talking about? He goes, I'll tell you. You got the financial statement for paying your taxes. So you want to show very low income. You got the financial statement for investors. So you want to show very high income. And you also have the financial statement so you understand what your business is actually earning. And I thought to myself, that is so unethical. How can someone say that? And then I got into the QoE space and M&A space, and I realized that's actually kind of true. There are a lot of business owners who show different earnings depending on what they're trying to do, whether it's pay less taxes or get a higher sell, or if they really want to understand how their CFO planning. I didn't say the right thing. If they really just understand the financials of their business, they can have different P&Ls for everything.
Okay. Would you say that the difference between managerial accounting and financial accounting, or are those distinctly different?
That's a separate conversation.
Okay.
Yeah, I remember that in college. Managerial accounting it's accounting. I would say it's almost like FP&A for financial planning and analysis, and it helps the business almost like it thinks like in the future. It helps the business plan. But normal accounting really is backward looking, and it just shows where did the money go, essentially.
Okay.
Both super important.
Like forecasted accounting, the other one is the history of what actually happened.
Yeah.
Gotcha. Okay. I can see why you would think having those 3 separate financial statements then it's a little unethical. So a lot of people...
It's just like, well, which one do we follow? Do we follow what you're showing as income and taxes, or do we follow what you're saying as what's in the SIM and what's in the P&L and what you're trying to sell for?
And I feel like that creates friction because as a buyer, when I'm buying a company, I want to see as much of an alignment between the tax returns and the information I'm given as a buyer as possible. So if they're giving me the investor P&L that's showing high earnings, but on the tax return, I'm seeing you only made $300K, but you're telling me on the back end you made $1 million, red flag off the jump. And
well, not only is it a red flag, a lender's going to come in and they're going to have a hard time giving you a loan if their tax returns are showing a way lower income. Now, there are good reasons for the taxable income to be lower than the financial statement income, but not always.
Yeah. It's not usually structured and planned that way.
Correct.
When I'm coaching clients and advising them on how to position their business to be sellable, the first thing I tell them is that I need a list of all your add backs so we can actually determine what your real SDE is, and you're going to have to make some lifestyle changes for 2 to 3 years so we can actually get you sold.
Yeah.
So let me ask you this, man. A lot of people entering accounting through structure, but not everyone finds their way into transactions per se. Where are the stakes? The stakes in QoE are much higher, and the story behind the numbers matters so much more because it's an outcome that someone's looking for is not just knowing where you're at. So, what pulled you specifically toward the deal side of the world, and what made your quality of earnings work the area you wanted to build your career around?
So I started doing QVs in 2021. One
Okay.
week after asking, what is a QoE? And Baker Tilly, they asked me, they're like, hey, can you help out with QVs? I'm like, what's that? How do we know what that is? And only 1% of CPAs actually work in QVs or have deal experience, because most CPAs, 80% of them are doing either taxes or audit. So I was on track to for the audit partner. That was my goal. I wanted to be an audit partner. But over the summer, audit, it like slows down. So you either have to do nonprofits or employee benefit plans, or they bring you into some other, in my opinion, boring accounting stuff. I wanted to do the fun stuff like audit and QVs. I realized was really, really fun because one, you're working in Excel almost the entire time, but two, you're delivering really good value. I mean, I get that there is value in delivering an audit report that says that numbers look good, but it just feels so much better to help someone sell their company after they've spent a lifetime building it up, and you want to help them sell it at the right price, and ideally the first time. That doesn't always happen because you never know who the buyer is. And on the flip side, you want to help a buyer buy the right company at the right price. So I hate to say it's life-changing work, but it is life-changing work, and you can really help someone in their career.
No, that's what I call fulfillment, man. You know what I appreciate about that path is that it naturally leads to something deeper than just accounting. It leads into judgment because once you're on inside deals, you're not just measuring numbers, you're interpreting the reality of someone's situation and helping them plan for the future, which is pretty cool. Now, inequality of earnings is one of those phrases that people in the deal world use often, but not everyone really understands what it means beneath the jargon. You know what I mean?
Yeah.
So, for someone hearing the term for the first time, member of the audience perhaps, what is quality of earnings analysis really designed to reveal, and why does it matter so much in a transaction? Because in my experience, QOV kills my deals most of the
I'm sorry.
time. I mean, no, that's good. I'd rather have a deal dead and not waste 200 grand. You know what I mean?
Yeah. Yeah. Oh, are you saying when you're buying companies or when you're selling
Yeah, no, I'm
companies?
buying companies.
Okay. Yeah. No, we tend to be the deal killers because we're the first person on the team. And this is kind of interesting. Before I get to your question,
Mhm.
no, I don't. I could just go straight to your question, but I'll talk about this later about
Okay.
incentives and how people are paid. So remind me about that.
Okay.
But when you hear quality of earnings, it's basically going to tell you how repeatable these profits are. So people talk about, oh, well, I want a quality of revenue on top of a quality of earnings. And that's already baked into the quality of earnings because we're seeing how good the revenue is. What's the customer churn? How long are they keeping each customer? Is there any high customer concentration? What expenses are going to go up when there's a new owner inside? Well, we need to apply a rent because the owner owns the building and he's not paying any rent.
Hmm.
And so it's basically going to show the new owner how much they're going to be paying. And I just heard a fee's 200K. Do you always use Big Four? That's
No,
awesome.
no.
Yeah, I'd love to say that's what we charge, but no, we're not quite there yet.
Well, the fee is 200K usually if I'm dealing with a broker because that's their commission, not so much
Okay. Yep.
on the
Yep.
deal.
Yep. Yeah. So we test all these things to make sure we get a good understanding of how repeatable the profit is for the new owner. Like if they come
Okay.
in and replace the previous owner, like, because sometimes there's some key employees that will leave with the previous owner if they're related, or there's key vendors or key customers that are going to leave once the business gets sold because they were closely related.
That makes sense. It's also pretty funny you mentioned specifically add backs on rent. I was looking at a deal, this is maybe 2022, and the seller was paying himself rent, but he had not upped his rent for 20 years, and his rent was nowhere near market. And he was arguing with me for maybe 2 hours about why I would have to basically pay more rent if he's not going to charge me more rent. And I said, well, there's no guarantee that I have that my rent's going to stay the same once you no longer are in the building, and you're not willing to put that in a contract. So what I'm going to need from
Mm.
you is a true rental scenario.
Yeah.
If you're paying $1,500 for rent, but commercial leases around this area is going for 6,500. I don't want to get a note one day for 5K that I have to pay.
Yeah.
So we didn't. That actually was what killed that deal in particular, which is pretty funny.
I think and you were not going to buy the building, correct?
No, no, no.
Yeah, I think that's generally the way I'd see that playing out because we're looking at adjusted EBITDA, not adjusted
Mhm.
EBITDAR. We're not adding back rent expenses. So we want to layer in what your actual rent should be at the market rate. And you would do like a lease study or get something in signing for 5 to 10 years is
Yeah.
generally what I see.
So, from your perspective, a business can look healthy from a distance and still have real issues once you get under the hood. So, when you are analyzing a company, what are some of the most common ways the financials can create a misleading impression of the business's true performance?
This is where I will jump in and talk about incentives. Essentially, most people get paid more if the business sells for more. The
Okay.
business owner, obvious, he sells for 5 million instead of 4 million, he's getting more.
Yeah.
Business broker or investment banker, they're getting a percentage of what they sell it for typically. So the higher they sell it for, the more they get paid. A loan broker, they get paid on the higher the loan is. And then a BDO at a lender at a bank, I'd imagine some of their bonuses are off of how many total loans they gave out and how long and how well those loans do. As long as
Yeah.
none of them are defaulting,
All
their
over
bonus is
time.
probably higher. And then lawyers will typically roll fees until someone buys a company
Mm.
or they'll just charge by hour, but they get paid more if they're going to get the deal to close
Yeah.
because they do so much of their fees towards the end. So at the end of the day, most professionals in M&A will get paid more for the business to sell higher and to actually sell. QV professionals typically are one of the few ones, and I'm sure that everyone has a different model of pricing, but from what I've seen, QV professionals are the only ones that always charge the same amount no matter what, as long as they do the work.
Hmm.
So we're the first ones that aren't incentivized to get it to sell for more or
So
to
you
buy for
are
more.
the device to
We
tell the
want to
truth.
show the accurate earnings.
Mhm.
So you mentioned, what are some things that we see early on that could slow the deal down? I think that's where you're going at, right?
Yeah.
Okay.
Well, not necessarily
Yeah.
slow the deal down, but what creates misleading impressions of a business's true performance? I don't know if that
So
necessarily slows the deal down or we just catching people blatantly lying because
yeah.
both could.
So the sim is essentially the broker and the business owner working together to show the company and show what's good about the company. A
Mhm.
QoE or financial due diligence is going to look at the sim, compare it to financial to bank statements, financial statements, tax returns, and we're going to pick at anything that they're claiming, but we're not seeing it line up and just say, show us how you're making $100,000 a month with this new line of service when the P&L is showing closer to 70. Show us this, show us this. Why are margins so much better in the last year when historically they've been at 20%, but now they're at 30%? So we're just asking a lot of questions and we're looking at anomalies and trying to get a good understanding of what's happening.
Okay. The best specialists don't just look for errors, they learn how to spot distortions, is what you're saying. The incentives and the blind spots that others overlook, kind of either by accident or it sounds like sometimes on purpose. What are the financial adjustments or deal issues you think most buyers often underestimate when they start looking at their first acquisition?
So a lot of times I'll see for smaller deals, like under five. I don't know. Does your audience look at larger deals, smaller deals? What size does your
Underneath
audience?
10 million and under.
Yeah. So for deals under like 3 million in revenue,
Hmm.
the owner's responsibility is typically pretty high. You're finding a unicorn if the owner doesn't do any work or works 10 hours or less, and you're able to buy the owner without having to do any work yourself
Yeah.
or hire a manager to replace the owner. But I see that quite often, that a business is for sale and the owner works 10 hours. So that's something that we like to get a good understanding of if that's really accurate. Is it just 10 hours in the office? Are they networking half the day, golfing? Are they making a lot of the sales that you'll have to replace? So a lot of times people underestimate the amount of work that a business owner does, and they underestimate how efficient a business owner gets. So I play basketball a lot. I'm a very, very small center. I'm 6'2". And if I were to go down, another center could replace me and do well. But a point guard could not replace what I do. So I liken that to like, if you're buying a business, there are some industries you would do fantastic in, but not all, not every industry. So generally, I see people who focus on a certain industry, I see them do better than if they're just like, oh, I just want to buy a business, any business. Because I know for certain that I could not run an HVAC company. I don't do well with machines or
Yeah.
installations. I just don't do well. Accounting firms, tax firms, I would do very well with acquiring those type of companies.
Okay.
Yeah, so I think people underestimate the amount of revenue the owner brings in um, at the end of the
It's
day.
funny that you mentioned that. One of my first questions whenever I do get to a seller is, "When's the last time you took a vacation?" And if they say it was 10 years ago, they think it's just small talk. I'm looking for how much time freedom do you actually have, and
Yeah,
how reliant is this business actually on you? And usually, if they tell me, "Oh, I take a vacation once every 3 months and the business doesn't depend on me, yada yada yada." The first thing I ask myself, "Are you on the org chart?" Because you're on the org chart by definition. You have responsibilities here, but you're telling me you don't.
yeah,
Tell me how this works when you're not here, and why don't you just do that if it works so well? You know?
yeah. No, and yeah, I mean, I always ask if they are truly working less than 10 hours, why would you want to sell?
Yeah.
You have a great revenue generating company. Why wouldn't you hire a manager to do what you're doing and then just own
Mhm.
it? So I always question what they're saying.
A lot of times, and this is just my experience as a deal maker, it's usually external pressure from kids or with the wife, family
Mm,
members, cousins,
yep.
are pushing them to sell, and they haven't considered what it's like to actually hire a manager, and it primarily happens because this is their life's work. This is what they've been doing
Yeah.
for 40 years. Our generation tends to bounce around a bit, but their generation, the silver tsunami generation,
Yeah.
they're very accustomed to doing the same thing for 4 to 5 decades. So they don't know what life is like without this in their life. And they never consider, okay, maybe if I just pay myself less, I can actually bring in a manager to take over operations.
Yep. Yep. No,
That's
I'm very impatient. I'm an impatient person. I had 2 weeks where I didn't have any QVs. I'd gone from
Mhm.
12 QVs to 0, and so I started a new company called qualityoferarnings.com to go build your thing. It's not a joke. I'm just very impatient.
Hey
So
man, I
I'm
would love an
fine doing
efficient
2
accountant
different
that
things.
detailed. That sounds amazing.
Yeah.
So speaking of which, you've completed a large number of deals, and a volume like that usually sharpens the pattern recognition in a way theory alone can never do. I mean, you said you started in 2021, 300 deals 6 years later is a large number of deals. So after working on 300 plus transactions, what have you learned about the difference between a business that merely looks attractive and one that is genuinely run well and very dependable?
That's 2 different questions. So I see the first question as like the financials. How do we know if the financials are right? Right away, if the tax returns and the financial statements line up, that's a pretty good business. And if there aren't any crazy ad backs or crazy round numbers in the ad backs, financials generally are a little bit better. That's a little bit more operational and it's kind of hard to tell. So sometimes in QuickBooks, you can see sales by employee and you'll get a good understanding of who's making the sales. You can ask the owner how many emails they get a day. I don't know how much insight that will give you, but sometimes it helps you understand if they're very busy or not. You were talking about vacations. You love asking people if they go on vacation or not.
Hmm.
One of the highest correlations between a deal not closing during or dying or surviving quality of earnings from what I've seen is that like if a business broker is not giving you financials right away and says that the owner is on vacation, that makes that combination for whatever reason makes it very unlikely that the buyer is going to buy the business. A business broker not giving financials and the owner being on vacation, it's a bad sign. Now, if it's like March and they had to do taxes or it's August the last week, I get it. But
Makes sense.
outside of those months, it just doesn't really make sense.
Why does the last week of August stand out to you?
I mean, it's right before school,
Oh, okay. Yeah, that makes sense.
Yeah, that's what I was saying. I mean, I'll probably take a vacation then too.
Okay. So once you spend enough time around transactions, you start to realize this work is not only about numbers, is what I'm gathering. And it's also
Not at
about
all.
standards, discipline, and how people behave under pressure when doing a deal. So technical excellence is one thing, and you seem superb at that. But sustaining in a field like this requires consistency, requires judgment, requires a certain kind of personal standards. What
Yeah.
standards have you had to build into the way you work in order for it to be the kind of advisor people rely on when major decisions are on the line, like selling or buying a business?
So I don't take any like fees from lenders if I introduce them to a lender. So
Okay.
that makes me not tied to the outcome at all. I don't do any bookkeeping or taxes or CFO work, which if they were to buy the company, I'd become their their tax person or their bookkeeper, and then I would essentially make more money off of them. So I don't do any services outside of QBs, and that's helped me maintain like complete independence, and they
Mm.
know that like all I care about is analyzing this deal, sometimes analyzing it to death, and the deal dies. But I'm just trying to give them a clear report of what the company, what the earnings are, and they're allowed to make their decision of what they want to pay based on those earnings and based off of the risk that I see.
Okay. Charlie Munger is famous for saying, "Show me the incentive, I'll show you the outcome." Sounds like you've really mastered that by making sure your incentives stay aligned in truth
Yeah,
and transparency. I love that.
yeah.
So, a lot of high performers become known for speed, and you being impatient. I love that for an accountant. Most accountants are like D&B workers; they drag along. But in your world, speed without rigor can be super dangerous. You have to be able to pay attention to the small
Mhm.
details. How have you learned to balance fast turnaround with deep accuracy, especially when clients want answers quickly and the consequences of getting them wrong are so serious?
Right. Great question. So we use our Excel templates to have a lot of formulas, a lot of conditional formatting, and we take every balance sheet and P&L. I don't want to give away this secret. Never mind.
You don't gatekeep. Come on, man.
I got secrets.
All right.
Nah, I mean, we got a really well-trained staff, and we know how to put the financials in such a way that we can analyze them very, very quickly,
Okay.
and that
We'll
are
call it a trade
it's
secret. How
super
about that?
thorough. It's very thorough, but very, very simple.
Okay.
I'm getting a second call from a lender.
Nice.
Yeah. Yeah, so I mean, it's just,
So
and then my team,
you got your systems dialed in.
yeah, we got our systems dialed in. We know how to get everyone working at the same time. So we get the sellers providing the data. I have my data analyst putting the work in, and then I'm already creating the questions based off of the sim and off of our standard questions. I take out the ones that we don't need to ask anymore, and we just move fast. And then also the biggest thing is I turn away the really bad deals. So if they can't provide me with direct access to the financial system, I won't do it because I know that project will take me 2 or 3 times longer than another project.
Got you. Okay. So you're like a great orchestrator and
Like, yeah,
you got
yeah, I
beautiful.
keep everyone moving. And then as soon as I'm done with the questionnaire, I send it to their team. But I don't schedule a 2 hour management meeting or a 3 hour management meeting. I have them answer everything in Excel, email me the Excel questionnaire, and then
And
I'll go through the questionnaire before a meeting. And then we just talk about questions that we have follow up questions on. And it makes the meeting about an hour instead of 3 hours.
I love efficiency. That's awesome.
Same here.
So the people who operate at this level for years usually develop a philosophy of some kind that goes beyond just their job description. How do you personally think about high performance at this stage of your career? Because you're crushing it, not just professionally, but in a way you manage responsibility, pressure, and growth with your team around you as well.
I appreciate it. I'd like to do things that kind of shake up the industry in some ways. Like, and I'm not trying to just say that like a tech phrase, but like for one, I think I started the 2 week QV. Like a lot of people would do 4 to 6 weeks and that was considered fast, but the 2 week QV really pushed a lot of people to being faster. It's also a moat around my business because very few companies can do what I do and make it as thorough as our QoE. Our QoE is 25 tabs.
Oh,
They can be up to 30 or 40 if it's a bigger company and there's more to analyze. I got lawyers to start putting in direct access to to financial systems, or else the seller has to pay a little bit more for the buyer to do the buy side QoE because I want transparency. I don't like waiting for PDFs to come through and then I have to convert them. I don't like waiting for Excel to come through poorly formatted. I want to get into to their financial systems, and that's what the LOI should allow. Those are some two big things I've worked on, and then I got a few other things up my sleeve that I'm going to announce pretty soon.
okay. Okay. Let's see why you're on top bracket.
Yeah, no, I love changing things up. I love changing things up because CPAs are known for copy paste always, but like I
Mhm.
love to change the way things are done if it can make it better for the clients.
Do you dare call yourself an innovator?
I guess so. Yeah, I did also start something called QoE Challenge. So it's basically just a sell side QV done after a buyer comes through and chops the price down. We can allow sellers to challenge the price, the QV, and come up with their own seller QV. Typically, when that happens, they can maybe reclaim some of their enterprise value, but sometimes it just ends up being to where they have to find another buyer.
I can see why.
Yeah. Yeah. So I say my my philosophy as far as the QVs is like, I'm not a confirmatory like CPA firm. Like I'm not just gonna trust, but verify, just verify the numbers. And I show what adjusted EBITDA should be had that business owner own it the entire time. But I'm also not a chop shop. I'm not just trying to bring down the price of the company to get my buyer to pay as little as possible. I want to show what the accurate earnings adjusted EBITDA should be.
Okay, well, that naturally brings us to another layer of the conversation because when someone develops a sharp skill like yours, and sounds like you've spent a lot of time sharpening your axe, the next question becomes how far can this how far can this skill set travel into ownership? You spend so much time evaluating businesses from the inside that I imagine it gives you a very different view of what makes a company worth owning, correct?
Correct.
Oh, have you ever bought a business yourself or seriously considered doing so?
I haven't, no. And the reason is I think there's a very different mindset between a founder, an innovator, and a CEO. I don't think I'm a natural CEO, but I'm a natural founder. Like I move really fast, move really quick, and I could build like new things really fast. But once you buy another company, you're taking someone else's team, you're taking
Mhm.
someone else's clients, you're taking someone else's processes. And that's a great path for a lot of people, but for me personally, I love building stuff. I love the new ideas.
So earlier you mentioned potentially thinking about acquiring, say, an accounting firm. You don't think you could bring that same innovative flavor, that startup agileness to a new company that's old and stale?
I definitely could, but but I don't like debt as well. And I'd prefer to invest my earnings into my current business right now. That's the plan right now. And I love just the name QoE Prep. It was just, we do QEs. That's what we do right now.
Mhm.
The bookkeeping, tax firms, CFO firms, they're great. They make a lot of money. People love the recurring revenue. I see recurring revenue and I don't want it. No, I'm just kidding. It'd be nice to get recurring revenue, but I do have recurring referral sources, which is essentially recurring revenue. But at the end of the day, anyone that has a good QOV team, it's the best lead generator. Like a lot of accounting firms, accountants are naturally, in most cases, they're not rainmakers. They're not going out there developing businesses. The CPAs who are developing business and the rainmakers, they're called partners. But most CPAs, they don't like to do that. Like we just don't like it. I don't like to do it. It took me 4 months to get my first sale, and then I got 7 that month. But you gotta get used to it.
You
So
cracked my code.
yeah. So I feel like, yeah, to answer your question, would I turn down a great company for a great price? Probably not. But I just really like building. I like building the new things.
That's
But you're absolutely right. I could grow faster. I could probably make more money if I were to buy other companies. But I don't know. I don't like the stress.
yeah,
I'm a runner. I love to run. I have a large family. I like to spend time with my family. So it's at what cost? At what cost do I want to buy another business? And other people would see me and be like, "Kale, that's crazy. You built your own thing. Like that's a lot harder to do." Yeah, it is harder in some ways, but I never had debt that I had to pay. So I haven't had like those cash flow
Mhm.
issues with the business. I use contractors instead of employees. So if I don't have work, money's not going out the door. So everyone has a different style of things.
Yeah, there's a really interesting book I think you should check out. It's called The Spider and the Starfish. It's about a decentralized organization.
Let me write it down because I will forget. Spider and Starfish by who?
I read this book maybe 5 years ago. I don't remember the author, but it's a very unique title. I don't think that there'll be other like it.
Okay. Yeah.
But I think you'd find that book fascinating based on your philosophy of approaching a
And
business
what's the
structure.
the main takeaway or the main thing it pushes?
That decentralized business operations and teams are more efficient than centralized ones for
Okay.
reasons that you just stated and others.
Yeah.
Yeah.
Interesting.
Yeah. So when
Nice.
the reason why I was curious about that is when someone sees deal flow so up close like you do, they often develop a specific opinion about what they would buy and wouldn't want to buy. So
Right.
I guess I was wondering if you were going to acquire a business, what type of business would it be what most interest
Mm.
you? What qualities would it have, and what will make you feel confident and comfortable stepping into ownership? Because the way you look at an opportunity is
Yep.
completely different than most people.
Yeah. I'm building a marketing company, especially with the quality of earnings
Mhm.
It's like building your deal team, but it's not going to be off of succession. It's going to just be monthly marketing fees. So I love marketing companies. I think those are pretty neat. In the accounting realm, I think probably just bookkeeping. It's
Okay.
very boring, but very profitable, and then the clients that annoy me, I just wouldn't take on going forward. But 85% of them would be great clients because it's almost like an insurance company. Like, why would you ever switch insurance providers? Like,
Yeah.
it's just bookkeeping. It's like, this is my bookkeeper. Another company, I thought about doing like a valuation company, like where you value companies at.
Yeah. Like
Um,
enterprise value, asset value.
yeah, but then you can't really do a QV and evaluate the company. But that's a interesting question. What's
Is
the
that
difference
not a
between
quality of earning? Is why can't yeah, I was gonna say, why can't you do that?
so so yeah, I'm going to answer that. So basically, the question is what is the difference between a quality of earnings and a valuation or 409A report? A valuation report is independent professional opinion on what that company's worth. A
Okay.
quality of earnings report is an analysis of a company's financials. And we could be paid by the buyers and do their scope of work. What do they want to study? What do they want to analyze? Or we could pay paid by the sellers and do their scope of work that they pay for. What do they want us to present in the sim? So they're going to look at the difference. Even though if there's a buy side QV and a sell side QV can show different numbers. And I think a lot of
Mm.
people fail to realize that. That like even if you were to get the same QoE, it's the same CPA firm to do a QoE on the same company, and they have like 10 different teams, you get them all to do, you get three of them to do different QVs. They're going to come up with different numbers by a little bit because at the end of the day, it's an analysis. It's not like an audit. There's not AICPA rules on how to do a QoE, which is kind of interesting. There's
Is
not
it
like standards.
would
Like
you
with
say it's
evaluation, you have,
unregulated?
what was your question?
Would you say it's unregulated?
Yeah, I mean, it's unregulated because it's all like none of these are I mean, most of them are not publicly traded companies, but it's an
Yeah.
analysis at the end of the day.
Okay.
It's not, and I'm not trying to undersell what a QB does. It helps with great outcomes on the sell side. It helps them sell the first time and protects their value if someone's trying to come in and make their business worth less. And on the buy side, it helps people buy the right company at the right price. So at the end of the day, you want to buy low, sell high with your favorite QOE guy. That's my tagline.
I love that. No, QB definitely plays a major important role, and this is for those who are interested in buying a business who's in the audience. Financial due diligence is one of the most important aspects of buying a business, especially when you're leveraging other people's capital to acquire it. If the QV is wrong and your debt service is off, you will not be able to make the payments to your lender. And the consequences of that are something that I don't ever want to go through again, and I don't want any of you to go through. So make sure you shop with your favorite QOV guy.
That's right.
Caleb, I think conversations like this are very valuable because they remind people that excellence is rarely an accident. It's built through standards, it's built through repetition, and it's a willingness to look deeper than most other people. And at this stage of your life and career, what do you say? What does refusing to stay average really mean to you personally? That's our tagline for the show. Never actually asked anybody that.
I mean, every year I try to make more money than I made last year. I guess that's one way, but I also try to provide more value for whether it's the business owner that I'm serving or the buyer I also have businesses that acquire other businesses or whoever my client is, buyer or seller. I
Mhm.
try to provide more value than I did than had I been working for them the year before by updating my processes, by what I look at, asking better questions, delivering it faster. I just try to keep on getting better.
Okay, I got one more question for you before we start to close out. Would you say that, or not, would you say, do you have recurring clients? Like, do you deal with the same CPA firms, the same lawyers, the same lead generation individuals, I guess, for you? Are you,
So, I mean, I've had a few clients come back to me after
uh,
buying a business and they want another business.
nice.
But the nature of transaction businesses, I don't have recurring clients. But my recurring lead sources are I have an investment banker in North Carolina that sends me a lead per month. I have a lawyer in New York, a lawyer in California that send me 3 leads a month. And then on LinkedIn, I post every single day a little bit of education about quality of earnings, and I'll get 3 or 4 leads from that per month. So, and then also CPA firms. If they don't, most CPA firms don't have a QoE team. It's really just the larger ones that have QoE teams, and then very few smaller ones will have them as well. They'll send over their clients to me because they know that I'm not going to steal their clients because I don't offer bookkeeping or I don't offer taxes. So other CPAs are a great lead generator. And then I have business brokers that'll send me a lot of leads as well. And they're transparent with me and they say, yeah, we only send you the hard deals that we can't get done without you.
How do you ever do outreach campaigns to investment bankers for deal flow?
So I started offering in 2022, I was with Baker Tilly. And then 2022 to 2024, I basically did outsourced or white label QB. Like I would do the work, but it would be under a different entity's name and they'd sell a
Oh,
project. I did that for 7 firms and had a small staff with me that was working on these projects. And then in 2025, last year, I started doing deals directly and I'd do a lot of outreach up to May. Then I got really busy in May. And then I did a little bit more outreach in July and I haven't really done any outreach in 9 months. So I've been very thankful that my clients keep referring me or my newsletter. I have a newsletter with 350 followers on it, Substack, QoE Prep. I don't really know the .com or HTC how to find it, but it's just QoE Prep Substack. And
okay.
I teach people about quality of earnings. So I think that keeps me top of mind of a lot of people.
I love that you're as much an educator as a driven operator. How
Because I'm
can
not a salesman. I'm not a salesman at all. And that's my style, I guess, of selling. I just teach.
how can people contact you that are listening to the show? What's the best form of
Yeah.
contact for you? Are you on Instagram, LinkedIn? You got
I'm on
business
I'm
number?
on LinkedIn, just Caleb Basile CPA or QoE Prep. My website's QoEPrep.com. My email's Caleb@QoEPrep.com. And those are the best ways of reaching out to me.
Wonderful. Wonderful. That was Caleb Basile, everyone, CPA, founder of QoE Prep, and a specialist in helping buyers and sellers make sense of the numbers that shape serious business decisions, and your favorite QoE guy. Now, what stood out to me in this conversation is that Caleb's work sits in part of a deal process that most people underestimate, but often determines whether a transaction creates confidence or regret. Especially me as a buyer. I know I can say that from experience. This is a conversation about more than just accounting, and that's what I love. He didn't get hyper technical on us. He kept it based in reality. It was about clarity, discipline, judgment, and learning how to see a business for what it truly is. This is Top Bracket, where we host conversations with high performers who refuse to stay average. Caleb is one of those high performers, and thank you for coming on the show. I'm your host, Mr.FourAM, and I'll see you on the next episode.
Let it clap it.
Thanks for listening to the Top Bracket Podcast, where top performers share their playbook. Subscribe so you never miss the next episode.